Good morning, traders, and welcome to BCR's morning market outlook. First up, let's have a look at the US dollar. The DXY has remained below 101 after weaker than expected June non-farm payrolls and lower oil prices reduced expectations for a near-term Federal Reserve rate hike. Markets are now pricing in a lower chance of a September hike, while attention turns to the minutes from the Fed's June meeting later this week for further policy guidance. Technically, the dollar remains in a high level consolidation phase, with the broader trend still holding above the 100 level. Resistance is seen at 101.59, followed by 101.8, and the psychological level of 102. On the downside, support is located at 100.56 and the 25-day moving average at 100.49. A break below these levels could expose the psychological level of 100. Next up, let's have a look at crude oil. WTI has traded around 68.6 per barrel as markets awaited the next round of the US-Iran negotiations scheduled for 11th of July. Investors continue to monitor developments surrounding Iran's nuclear program and the potential impact on sanctions and oil exports. While easing geopolitical tensions and rising supply remains bearish for prices, any breakdown in negotiations could quickly reverse sentiment. From a technical perspective, WTI remains in a bearish trend despite stabilizing above recent lows. Initial resistance is seen at the psychological level of $70, followed by the 14-day moving average at 71.38 and then 73.04. On the downside, support sits at 67.05 and 66.8, with a break lower opening the way towards the medium-term target of $64. Next up, let's have a look at spot gold, which has traded around 41.60 per ounce as weaker US jobs data and lower expectations for a September Fed rate hike supported demand for the precious metal. Continued uncertainty surrounding US-Iran negotiations and ongoing central bank gold purchases also helped underpin prices, while a weaker US dollar lifted the broader precious metals complex. Technically, gold has maintained its short-term rebound and continues to trade above its short-term moving averages, keeping the bullish structure intact. Resistance is located at the psychological level of $4,200, followed by the 30-day moving average at $4,251 and then $4,300. On the downside, key support is seen around the psychological level of $4,100, followed by $4,050. Lastly, let's have a look at the Australian dollar, which has held around 69.50, extending last week's gains as a weaker US dollar and expectations of further RBA tightening supported the currency. Markets continued to assess the RBA meeting minutes, which reinforced concerns over persistent inflation, while softer US jobs data reduced expectations for near-term Fed tightening. Technically, the Australian dollar remains in a corrective rebound after reaching oversold levels. Although the broader trend is still bearish, immediate resistance is seen at 69.50, followed by 69.76, and the psychological level of 70 cents. On the downside, support is seen around the psychological level of 69 cents and followed by 68.85.